now, and definitely we know Bitcoin is under a lot of pressure right now after losing that $90,000 level, tried to maintain it. But let's look at how stocks related to crypto-related stocks are doing on U.S. exchanges. That's for yesterday's close. So we see that pressure still on them. So as long as you're a stock that's related to cryptocurrency, Bitcoin, and any of that, whatever happens to Bitcoin happens to those stocks too. And we see MicroStrategy there. Closing yesterday, $195.42, down a big 2.17%. But the biggest drop we have was from Marathon Digital, $11.51, 4% down. We see Riot Platforms, $13.88, 0.50%. So all of them, most of them are down, were down yesterday. And we took the top five. We see Clean Spark, $10.61, 3.19% down. So definitely the rout is continuing, and definitely major altcoins are also suffering at this point. And there you have it. The Fear Greed Index, it's a very fearful market. It's not greedy at all at this point. The market is very fearful. Let's look at some of the top headlines now. We're seeing Bitcoin traded funds have experienced a dramatic reversal of fortune. That's according to collective net outflow, approximately $2.6 billion over the past 5 weeks, marking the steepest withdrawal since the product's early days. According to market data there, the significant institutional retreat comes amid a sharp downturn in the price of Bitcoin, which is falling more than 30% from its recent all-time highs in early October, sinking to a 6-month low, below that $90,000 mark. So I guess it's official. It's a bear market at this point for Bitcoin. Then we see BlackRock. They sidestepped the Solana ETF showdown. A lot of ETFs still expected at this point. But as the race for the next major crypto exchange traded fund intensified, we're seeing the market leader there, BlackRock. They appear to be sitting out the burgeoning Solana ETF competition, choosing instead to focus its digital asset strategy on established blue-chip cryptocurrencies. The world's largest asset manager, which fills the biggest spot Bitcoin and Ethereum ETFs by assets, has publicly stated it has no immediate plans to file for a spot Solana ETF, leaving the field open for competitors. Now we see Singapore Exchange, they've introduced the iEdge linked Bitcoin there. It's like a perpetual futures as it deepens its reach into digital asset markets. The exchange wants to meet rising demand from funds and professional traders by offering contracts with continuous pricing, central clearing, and margin standards that resemble established futures markets, while shifting some crypto risk away from offshore platforms and into a listed Singapore venue. This launch comes as professional investors seek clearer, safer structures for cryptocurrency exposure. So if you don't want to hold the assets, by yourself, then definitely get that ETF. But yeah, the markets, a lot of asset classes right now struggling. Even the safe haven gold not doing any better today. But we'll see if there's a change for the midweek trade tomorrow.